All right. Welcome to Coffee with Marcus and Mark, the #1 stock market show on Spotify and one of the most popular market updates on YouTube. In the show, we talk about what's happening in the markets and how we are trading them. Today is Tuesday, July 2nd. The NASDAQ records a surprise. We'll take a look at the major indices and how they are moving. NVDA slides. JOLTS job openings better than expected. Is this bad or good for the Fed? Tesla continues to soar and yields pull back after two huge surprising updates, plus two stocks that I'm keeping an eye on, and two new WTF signals. So we'll take a look at those and talk about whether or not we traded them this morning and what our plan is. As you can see, there's a lot to talk about, so let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and let's go ahead and take a look at the charts. So let me share my screen here. Perfect. S&P, look at this. Market's trying to figure out what the heck to do with this short holiday week. The S&P 500 right now is trading higher. S&P, if we look at a 5-minute chart today, actually, let's go back to yesterday because I think that this just kind of puts it all into perspective. Traders trying to figure out what comes next. S&P yesterday opened higher and then immediately dropped, filling that gap. Tried to rally back up to session highs and then pulled back, made session lows, did a double dip here, came right on back to the open of the session where it just chopped around for the remainder of the day, a little bit of a sell-off and then a rally into the close, but not a whole lot going on when we look at the actual chart for the day. But here we see today, after a weaker start, opening lower, we rallied, filled the gap. Not these big moves taking place. We see right now the S&P's up 3 points, which is nothing for an index that's trading at 54.78. Here right now, trying to figure out if this move has legs or if we're just going to flirt with the previous session's close and go nowhere. Going to a daily chart, we see that the S&P is slightly higher, the Dow is slightly lower, going nowhere as well. The NASDAQ leading the way. If we stay at these levels that we're at right now, looks like another record close for the NASDAQ yesterday. Although we were unable to get through Friday's intraday record highs, there was a new record close for the NASDAQ, with the NASDAQ closing at 17,879. Today, trading at 17,917 is 18,000 for the NASDAQ. A possibility today. We will have to see. Right now, a little bit of a march higher here. If we look at a 5-minute chart, making session highs, just trying to make a move, but not a whole lot of volatility in here, not a lot going on. And, part of this is if we look at the economic calendar and we come over here to PowerX Optimizer, today we had Fed Chair Powell speaking at the open, also JOLTS job openings, but trying to figure out what to make of this news and data. Now, Powell, he says that the Fed has made quite a bit of progress on inflation, but needs more confidence before cutting. So he was sitting on a panel today, and you never know when you have that panel discussion if there's anything that is going to get interesting for the markets. There's that statement that he made. This is where he was at a central banking forum on Sintra, Portugal. And he says that the last inflation reading and the one before it is lesser extent suggests that we are getting back on the disinflationary path. We want to be more confident that inflation is moving sustainably down towards 2% before we start the process of reducing or loosening policy, he added. So, what does that mean for the markets? Traders trying to figure things out. Here we see JOLTS jobs openings, 8.14 million. This comes in higher than the forecast, also higher than last month. We know that right now there's a little bit of of a fine line or balance between data that shows the economy is weakening and data that shows that the economy is slowing, right? Because we don't want a situation where the economy weakens substantially and the Fed cuts because of a weakening economy, but a situation where the economy is slowing and inflation is getting under control. It's kind of that Goldilocks scenario for the Fed, where the economy doesn't come to a screeching halt, but the employment situation gets weaker, which helps the inflation battle before the Fed makes it easier for them to cut rates and start that rate cutting campaign. The stronger JOLTS jobs number, does this matter? Well, right now, traders just kind of shaking it off. And as we just saw, although it's been a super, super quiet session, the S&P and NASDAQ trading near session high. So it doesn't seem to matter to traders. We do have a busy week when it comes to jobs and data being released. Tomorrow we have ADP non-farm employment numbers. There's unemployment claims, of course, and then we have the all-important significant jobs report on Friday. However, we see bank holiday on Thursday, and markets are actually closing early tomorrow. So with a holiday week, this typically is a low volatility, quiet week. And can we get some movement? Yes, but most likely just chop it around and not a whole lot of excitement. Things can pick up next week or the following week. And this is where, if we look at our earnings calendar, will things chop around until the third week of July? We'll have to see. But if we look at the number of companies reporting earnings here, and we look at the third week on Friday, actually, no, it's the second week. My apologies. Then that makes sense because earnings season kicking off next week. Next week, that is Friday, JP Morgan. So getting into some earnings, this could be what the market needs to really get some more momentum to the upside or to the downside. Speaking of momentum, is momentum lost when it comes to NVIDIA? Well, NVIDIA down 2%, pulling back a little bit, maybe finding some short-term support around 120. But will the AI play continue in the second half of the year? I mean, this is where at some point there needs to be a pullback and a little bit of a pause and maybe some redistribution of some of this money. Will the AI play last? I don't see it going anywhere but slowing down, maybe taking some profits, putting that money elsewhere in the market. Hey, that's definitely a possibility. And if we look here at the heat map, this is where we talked about it yesterday. The S&P 500 in the first 6 months of the year being up 14.5%, but you exclude all of the gains from NVIDIA, and the S&P 499 was only up 4.1%. So a lot of this is driven by these huge, huge gains in NVIDIA. And is it time to see some of those gains taken, profits taken, and then some investment into some of these other companies? We'll have to see. But we know that, hey, just because the S&P 500 is green doesn't mean that everything is higher. Now with NVIDIA down, we see that there are some of these other plays making moves. Speaking of making moves, we have to take a look at Tesla. Tesla having a monster session, up 8.5%. This comes after Tesla reported better than expected deliveries in the second quarter there. So investors liking that data. And I mean, Tesla just being on a tear to the upside. If we look at where it was trading at just at the beginning of June here, we're up almost 30%. So huge, huge monster rally for Tesla. We'll see where this stops. Now, Tesla does have earnings on Wednesday, July 17th. We'll have to see if that's a catalyst for this rally to continue or if there's a disappointment there and a pullback and some profit taking. But hey, Tesla just coming strong after a couple of months where it was just kind of choppy and sideways. So Tesla making some moves today, and looking at that heat map, we see that there's some big green there for Tesla. Apple up 1%. When we look at the Magnificent Seven, we see that there's strength in Tesla, strength in Apple, and NVDA showing some weakness. As far as what to expect for the second half of the year, I saw a Seeking Alpha poll, and they asked who would be the best performing S&P 500 stock in the second half of 2024. 31% of those that responded said NVIDIA. Is this a good thing or a bad thing? Is it better to be a contrarian? We'll have to see what happens here. Now, there were a few other big names that came into play. Microsoft had 8% of the vote after NVIDIA. Microsoft making new records, and then Apple receiving 6% of the vote. So is it a poll that matters? Maybe, maybe not, but it just goes to show that right now the interest still is in NVIDIA, Microsoft, and also Apple. Taking a look at the markets, we have to take a look at these yields. And the 10-year yield actually was pulling back more today. It looked like we might get a decent pullback, but it's kind of slowed down, now down 0.7%. But just a real surprising 2 days here where the 10-year was up 2.7% and then 1.5%. So this was a bit of a challenge for one of our stocks, and might as well take a look at those now. So right now, if you've been following along, you know that Marcus and I have a CSIQ position, and CSIQ. Last week, we decided to sell 1550 puts. I got 50 cents on those 1550 puts, but it continued to slide on Friday, and then also there was some follow through on Monday. Now, this is just an complete opposite move that we saw in the yields, right? So yield spiking, CSIQ falling, and that's what I expect here. So I want to see these yields come down. This higher for longer thing, let's be done with this. Let's focus on Fed rate cuts. The Fed, let's cut. Let's cut. We don't need to go crazy, but just get that first cut behind us. And I think that that's going to help out slow the rally there on those 10-year yields, and create a little excitement here with investors having confidence in the Fed's next move. So right now, nothing to do with CSIQ, and yes, it had a rough 2 days, but nice to see it up a little bit today. I mentioned there are two stocks that I'm keeping an eye on. Halliburton is one of them, and this is because I own shares of Halliburton at $34.50. I've been able to sell calls. I've been able to sell puts, collecting some nice premium on Halliburton, and right now my goal is to sell $34.50 calls. Not quite the premium that I wanted. So if we take a look at the wheel analyzer and look at the calculator, and I come here to Halliburton, we see that to get 30% annualized for the option expiring this Friday, I need 12 cents. If I go out a week to July 12th, I'd need 32 cents. Now, right now, if I go out a week, we could see here that we're close to 30% annualized at the 34.50 for next week. I'm keeping an eye on this. This could be interesting. There's definitely 30% available at the 34 strike. There's actually 40%, but I want to sell the 34.50. So I'm keeping an eye on this for next week. Also, if we do get a nice quick rally here, this Friday is definitely on the table. Right now, we see that with this painfully slow market that we have, and also with the holiday, the 34.50 is not giving us much premium. 4x8 is the spread, and that would be just 10% annualized. So no interest right there for this Friday. I am watching Halliburton, though, to see if there is a bit of a rally, to see if the premium for this Friday picks up. If not, I might consider next week, because it's expected to be a slow week here, and it could just get slower from this point on. Another stock that I'm keeping an eye on, and this is IWM. IWM. Now, this is one that Marcus and I traded early June, and we made some nice money on this. Selling puts, getting a sign, owning shares, selling calls. This worked out perfectly for us. Then on Friday, we were called away. Yesterday, pulling back a little bit. Today, it looks like this, there was a bit of a move higher, but it's kind of paused and we're flat for the session. So I'd like to see this pull back a little bit more. And I see a short-term support level around 199. So here it looks like traders are really just stuck on this 200 level. If we look at a line chart here, we see that the 200 level taking closing prices looks pretty decent, but I would love to be able to sell 199 puts and get some premium on this one here. So this is definitely something that I'm watching for today's session. UPS, another trade that we're in, just kind of grinding in this range that we've had that's been established since May. This one right now, we had a little bit of follow through to the upside after FedEx reported earnings, and since it's pulled back, what's FedEx do? FedEx still strong, staying up here. So UPS, we need another reason for UPS to rally. Maybe it's earnings. Maybe it's earnings. And hey, I'd love to see UPS following FedEx footsteps, saying, hey, we've done our job trying to reduce costs, and let's do a stock buyback, right? Stock buyback reduces the number of shares that are outstanding, which means that the shares that are still in play have a higher volume. So that'd be great. I'd love that. That wishful thinking, but sometimes you have to have a little positive thinking. I mean, this is trading in this nice range here, but gosh, let's get back up to this upper range here. Super strong support. Let's make a move to the upside, break through 140, and never look back. So those are open wheel positions. I'm looking to fill two more spots. IWM is on my radar right now. Not a whole lot going on in the market, but we can take a look at WTF trades because we did have two new signals today, KDP and Procter and Gamble, PG. So both signals valid. And right now, PG based on the open, slightly higher. KDP based on the open, slightly lower. Did we trade these? No. Marcus and I passed on these, and this is where we've done some analysis and we've done some studies on signals, and I'm happy to take every signal. But we also saw that some of these open below entries, these pullback entries, have really, really good numbers. So we're in a couple of trades right now. For me, I'm in 6 positions, and I'm in Disney, Merck, Moderna, PCAR, PDD, and RTX. No exits right now for these. And instead of adding another 2, I decided that I was going to hold off, see if maybe there is a little bit of a pullback and I could do an open below entry. That is an entry below the original signal price. And for me, this was kind of a win-win because if we rally nicely from here, there's likely to be a little follow through with the open positions I'm currently in. And maybe we could have some exits there, even if I miss a brand new entry on the 2 that popped up today. But if we pull back a little bit more, then I have an opportunity to get into those 2 at a lower price. And then if we rally after that, then it could help out the overall signals that we have entered. So that was my plan, why I passed on these 2 signals, but absolutely valid for anybody who owns PowerX optimizers and is trading the WTF strategy. I think that they were great signals. Just decided to hold off and to see if there was an open below entry opportunity coming sometime soon. So that is going to do it for today's stock market update. Keep in mind that tomorrow markets have an early close, and with that early close usually brings low, thin traded markets, low volatility, low volume. And because of that, we will not do a coffee with Marcus and Mark tomorrow. We actually have found that this type of week where we have the short trading session and a holiday, usually there isn't a whole lot going on. So it's a good time to spend extra time with the family, or maybe do a little more work on trading plans, testing, that sort of thing. So no coffee with Marcus and Mark tomorrow. And Thursday, we have markets closed, but we will be back Friday. So we will do a video on Friday to wrap up the week and talk about what our plan is for the upcoming week ahead. With that said, here's a little dad joke for you. What did the beach say when the tide came in? Long time no see. And with that said, I'll see you on Friday. Until then, happy trading, everybody.